And today we are going to talk about the barriers of entry for asset managers that are quite high. So is everybody's understanding. Can you tell me a little bit, what are the barriers to entry?
There's a few different levels of barriers. First of all, it's costly to set up an asset management business in terms of the legal framework. And there's also costs associated with the funds. So you always hear about this race that you want as much assets under management as possible. And the reason for that is that you have costs to fund administrators, to custodians, there's legal costs, and that will and normally all of those costs are charged to the fund, which means that if you have little AUM, you will have a big fund drag, which will ruin your return. So costs is one, so you need to be well funded. And the rule of thumb used to be in traditional hedge funding that, if you don't even have $100 million, don't even start. And even there, you won't have much, right? You can only have small staff numbers at 100 million in traditional finance. So that's one thing. The other thing is like the credibility of the people. They need some kind of track record. And it's very hard in the beginning when you're small to raise assets. So the bigger you are, the easier it is. And it has to do with credibility and the track record. So it can be hard to source credible people, especially when you're small, because credible people usually expensive. Yeah. So you need some kind of connection, and that can be a very hard thing. It's also hard to distribute. It's very hard. It's a very intense process to go around. You start from scratch. You want to pull in investors. It usually takes a lot of time. Some of the relationships we've had with institutions, you have to work with them maybe over a year sometimes before they eventually make an allocation. There's also technological hurdles. You need the right setup. That takes time. It also takes knowledge. The service providers, you need good relationships, because even if you have a service provider, having a good relationship that takes time will make you, let's say, be able to use that service provider much more efficiently. So I can give you some examples. So if you just, you have a service provider with a lightweight relationship, you will get the product typically. But if you have a stronger relationship, they might help you out all sorts of things. They might bring investors in. They might work with you on a product. But having that kind of relationship is time consuming. And that comes back to the staff again. When you're small, when you're starting out, you don't have the resources normally to keep all of that going. But that's, so I would say those are the main barriers to entry.
It's very interesting that in a world ruled by money, a lot of the barriers to entry are not about money.
That's right. Yeah. But money can, if you're well funded, you can outsource you can get a lot of things done. But typically you have to start somewhere, and we started with 1 million, which is nothing. $1 million in January 2019.
Yeah. And how was that for Hilbert Group? I know, the staff today, and also you has hedge fund backgrounds. You are from the world of finance, so I guess you were somewhat connected. Yeah. But still, how was the beginning?
It was tough. We had, let's say, part of the track record, some kind of credibility and knowledge how to set up a business. But what we didn't have was the assets under management. So that was hard. And it was a bit of a drag the first year, costs. And then getting more AUM in, that was the hardest thing in all of this. We had some of the pieces, but building out the distribution and eventually getting more AUM, that was the biggest challenge for us, for sure, even though we had the background. Because there's so many that have some kind of background who are starting out, but where most people struggle is actually getting more AUM in. And luck plays some part, right? So if you're right in the cycle, even if you have a mediocre strategy, let's say you just go long the market, you can't really charge hedge fund fees for just being, buy and hold. But if you come in at the right moment where the market is taking off, much easier to raise assets, and organically your fund will grow, right? So if you come in crypto in a year where crypto goes 250%, you have 2.5 times your AUM just organically. That helps, and that makes it easier. So it's a huge difference if you come in at a bad spot in the market or a good spot as well.
Yeah, and that's a very good point with the AUM and also the willingness and traditionally you talk about topish signals. It's when people and the market is very risk willing and they buy everything and it will just go up.
Yeah,
and I can imagine it's a little bit the same in the inflow of funds to hedge funds and to the different strategies.
For sure. And typically, peak interest is when it's about to turn, more or less.
Yeah.
Then you have peak interest, and then usually, professional investors, have seen this and are aware of it, maybe more so. But I think it's a general rule. You have the maximum amount of FOMO, whether it's traditional markets or crypto, when the market is about to turn.
Yeah. Interesting data point for running a hedge fund. You see the interest in.
Yeah.
And for Hilbert's sake, how does the outlook in terms of being profitable and in get rid of this drag that has been? So what's the situation there?
I think it's been greatly alleviated with, we've grown a lot, 10 times in the past year. So for most of our funds, or the big funds that matters, and also including the acquisition of Liberty Road Capital, their drag isn't even a factor because they're so big, the funds. But in terms, we still want, and we're still going to start funds that are small, because you need to, there's new products. You have to start somewhere, and you grow, and maybe you shut down some products. It depends what the investors want. But I think, in terms of profitability, as we said in the most recent quarterly report, or the comment to it is that we see a clear path now that, around Q1 next year, we will reach that for the first time. We've been listed 3 years. It's the first time we now have a more straight and clear path to profitability.
Yeah. And then with increased AUM and just continue to grow, the path really looks just more and more profitable.
Yes, that's right. But we need to be paranoid because you have to perform and do things well to retain the AUM and then get new assets under management in and have the long-term view. But there, it's important, and there we think it's important to have different type of products, because different products goes, well, or are in vogue at different parts of the cycle, basically.
And what's the coming strategy to combat these barriers to grow and to expand further?
I think we just need to keep going the way we've done. Because try to do everything better, everything from operations to investments and so on. But I think we just need to keep improving, but we have a very good foundation. But more partnerships as well, bringing in new products or maybe new M&A to build in that way and work more closely with clients. It's a lot of groundwork. So, for example, you talk to a lot of potential investors and really understand, okay, what do they need? And if you then can tailor a product around that. So that's one path we would like to take, and which we've taken with Sapo Bank, but we would like to do it with others as well. That, okay, we solve a specific problem and it takes time to understand that, and then how do we structure a product around it? So I think that's going to be an important part of what we do and how we grow in the future.
Well, thank you so much.
Thank you.